Hello, this is Brian Shannon from Alpha Trends Blogspot. It's Wednesday, the 19th of December, 2007. The market's closed, and it was a pretty uneventful day. The S&P 500 lost 16 cents, or 0.11%. You can see that intraday it did try to move higher, but prices were rejected by that declining 5-day moving average. And again, when you see a rally on the 10-minute time frame with this declining 5-day moving average, typically those rallies do fail. Sometimes they can hold above that 5-day moving average for a little while, but you want to pay in particular attention to the direction of that moving average, which is lower. It also, that area, it did move up briefly through, past this little level of resistance at 146.80. But 146.80 does seem to be a valid resistance level right now, and we've got these moving averages crisscrossing, representing indecision on this time frame. Bullishly, you can point towards this higher low, but realistically, we need a higher high to match it. Now, tomorrow, if we can get this 5-day moving average to kind of flatten out a little bit, and then it takes 146.80 out, then perhaps we can see a little bit more of a bounce. But again, the primary trend is lower. We've got this gap to deal with and potential for resistance there. We've also got this head and shoulders pattern that I've been pointing out for the last few days that, we're right at that neckline again. So a lot of mixed signals. Again, on the daily time frame, you can look at this and say, well, recently we don't have a lower low. What I'm looking at here is we have a lower low right there. And this prior level of support seems to be where we're having trouble getting back up above as well. Now, the lower high might have been this, but you can look at it and say, really, this whole daily time frame is just a big mess. And that makes you want to back it up to the longer-term time frame. And the longer-term time frame doesn't give us any clarity either. What we see here, though, is a picture of what looks to be distribution. We only know distribution after the fact. That is, if it breaks down to a new low, then you can say that was distribution, and then we have a lower low. If the market makes a lower low below 140.25, I believe this is, then we've got an official downtrend. But there's troubling signs here because the market is having such trouble with, here again, today the 200-day moving average is right at that level, and we do have an average closing price declining over the last 50 days. The mathematical trend line is the way that you can look at a 50-day moving average. It tells you the average closing price over the last 50 days has been declining, and there's nothing really still bullish on any of these time frames that we're looking at here. It looks like maybe it's starting to accumulate in here, but accumulation is not a reason to buy. It's a reason to watch closely for signs that the market is being controlled by buyers and then take action. When you have the primary trend still, like I said here, lower on this time frame, then you want to look at the shorter term time frames for your timing decisions. And even if you take a long trade here, you have to remember it's against the larger time frame trend, and that makes it low risk. So you trade smaller share size, and you also keep your stops extra tight, or just be more disciplined about honoring your stops if you have a problem with that, which a lot of people do have a problem with their discipline. Obviously, it's the hardest part, I think, to success in the market. You can see here on the 1-minute time frame, the market started out kind of slow, and then it developed a short-term uptrend with these higher highs and higher lows. That was invalidated here, and sellers came out underneath that VWAP along with the lower low. The buyers did retake control here in the afternoon, back above the daily VWAP 2 days in a row, kind of in that area, but they weren't able to hold onto the control. So it's still a mixed bag. Anything can happen here, but the inability of the market to rally in here is somewhat disturbing in my mind, and kind of paints a picture that really continues to say be very cautious in here. The semiconductor index, again, it's in a downtrend. Perhaps it's stabilizing near these prior lows in the 400 level, but just nothing going on in there. And the IWM, of course, is where we've had the most concern in this market. And again, on the monthly time frame, even here on the weekly time frame, we don't have a lower low. But this level, this 73.5 level, continues to be very important. We do have the bounce that I was looking for materializing in here. And now we're starting to see maybe the volume is going to be affected by holiday trading as well. So That's something to look at when you look at the volume, or to remember when you look at the volume. This is looking a little bit more bullish than the other markets, though. We are seeing in here that it was able to get past its little level of resistance in here, and then that area did act as support on a test today, and we saw a higher high after that. We've got the 5-day moving average flattening out, so now I think that our first important level of potential support is at about 74.65. And then if that level is breached, then we've got another test of 73. And I've spoken enough about that level that we know what the consequences of a breach of that level would be. Here on the 30-minute time frame, though, you can see that we're back to this level that's been very important for the market, this 75.80 area. There was resistance here, held this support for a while, and then again last week broke down below that. Getting above and holding above here for a day or two might start to give this market a little bit more time to recover, but you still have to look at it as guilty till proven innocent. We've got a declining 50-day moving average below a declining 200-day moving average, and this market led the S&P 500 higher over the last several years, and the reason I place a lot of emphasis on this market is because it has the potential to lead it downward as well. So continue to be very cautious in here and keep an eye on this 74.60 level as far as potential support. And again, tomorrow after the close, it looks like research in motion is going to have a lot to do with where this market may end up moving here in the short term. So I think that's a very widely watched earnings report tomorrow. The NASDAQ 100 still thinking that it's probably going to test this low over here and the 200-day moving average at about 48.25. It's just inability here to find any bounce as the 50-day moving average is declining. And here, I was painting a picture on the blog, and I posted this intraday as well. Yesterday, it started to look like it was going to develop, and then again today, it broke the downward trend line here, but was unable to breach this 50.25 level. So still just kind of neutral in here, but overall, you want to remain suspicious of it while we have this 5-day moving average declining. Just again, all over the place. Don't get focused on the trend of one particular time frame when I talk about trends here, because I'm talking about trends on here. I've mentioned the weekly time frame, the daily time frame, the 30-minute, the 10-minute, the 2-minute, and then the 1-minute time frames. There's a lot of different trends in the market at any given time. Which one you focus on is up to you, and take from my analysis what is important to you as far as your perspective on the market and what time frame you're trading on. I'm generally a short-term trader, so I'm looking at the daily time frame to really come up with what I think is the bigger picture. Now, an investor is going to look at the weekly and the monthly time frame, but there's a lot of conflicting signals from all those time frames, and when you have that happening, what it means generally is that we're in a period of indecision. Indecision occurs at accumulation or distribution, and you only know after the fact, but you want to look at warning signs or encouraging signs as they develop. Unfortunately for the bulls, it seems as though most of the signs we're getting tend to be negative in this market, and that's why you have to continue to keep your guard high. And remember what I've been saying for the last several months, which is this is more of a day trader's environment. If the market breaks below, let's say for the S&P 500, if it breaks below 140, then I'm going to become a lot more bearish on this market, because I think it has much bigger, longer-term implications as far as what overall trend may be and what the institutional money may be doing. Capstone had a good day in terms of, I said that you don't want to chase it here, but look for a pullback to 150 to 152. Today's low was 152, so continue to keep an eye on that one because that one acts pretty strong here.